Good morning, everyone, and welcome to What's Up Wednesday. Joining us this morning, Hadyn Little, our CEO of Foundation Fund Managers. We're going to be discussing a little bit about the market movements, the currency movements, and just a recap over what's happened over the past month. So Hadyn, welcome and thanks for joining us again this morning.
Hi, Gary. Thanks for having me.
Absolute pleasure. So shall we get the ball rolling and just find out a little bit about what's actually happened and see where we're tracking going forward. We're looking back now with August 2021 behind us. And if you look at the stats, we opened the month around about 14.61 to the dollar. And then at the end of the month, we closed at about 14.52, which over a month is a small gain, but a gain nonetheless. I think the big question is, in that month itself, there was a lot more chaos going on with the overall stats. What actually happened?
Yeah, August is traditionally quite a volatile month in equity markets and currency markets, thanks to our friends in the Northern Hemisphere, who are all sunning themselves on the beaches around the world, COVID allowing, and that creates thin liquidity and exaggerated moves on headlines. August 2021 didn't disappoint. If you just look at the opening and the closing values of 14.61 at the start to 14.52-ish at the close, that's a 9-cent gain and looks like it was a bit of a snooze fest over the month, but it was anything but. We actually had a 1 Rand 17 cents trading range over August, opening at 14.61, quickly strengthening down to 14.22 to the dollar by the 4th of August. And just when it looked like we were shooting back towards the 14s and perhaps late 13s, which would have been great, unfortunately, things turned around in dramatic fashion, and we started a fairly aggressive weakening trend right up until the 18th of August, when an event that I'll talk about in a moment really sent us way past the 15 Rand to the dollar mark, and actually took us all the way to 15.39 to the dollar by the 20th of August. So 15.39, at that point, it was, put your head in the sand and try and ignore what's going on. It really was looking bad for the Rand, and not just the Rand, for emerging market currencies as a whole. And people were bracing for 15.50s and beyond. But just as quickly as things weakened for the Rand earlier in the month, it turned around, and we quickly started strengthening again, and in fact managed to post a monthly gain, as we've just spoken about, coming all the way back to 14.52 by the close. And it was a bit of a whipsaw month, but at least we finished stronger.
That's phenomenal. So Hadyn, you say the Rand bounced between the 14.22 and the 14.39 mark, which is rather wide trading in terms of its range. Just if we look at what actually happened, what caused these triggers for this volatility? Sure.
So there's always quite a few moving parts in the currency markets. Of course, COVID and the Delta variant is always in the mix. There's local headlines which play a part to a certain degree. And in fact, August did have a headline that played into our favor, which I'll talk to in a moment. But the primary driver of currency movements, especially for the Rand, is what's happening to the dollar, as always. And the primary driver of dollar action is what is the Fed doing, the Federal Reserve being the American central bank, and what is their position on monetary policy in the States. They currently have an ultra loose position, i.e. a lot of stimulus going into the US market, $120 billion a month of asset purchases that the Fed is spending, and keeping interest rates anchored pretty much at 0% in their short-term interest rates. I think it's 0.15% or something crazy like that. So we know that's the situation, and that situation has been a source of dollar weakness for many, many months now. But we're coming to the end of that process, and so speculation around when the Fed is going to start closing off the taps, therefore reducing the dollar supply and ultimately increasing interest rates in the US, is dollar positive. And now we're in this sort of yo-yo scenario where the market oscillates between, are they going to tighten or they're not going to tighten. And we started the month with they're not going to tighten too soon viewpoint playing out. We had some disappointing market data out of the States in early August. We had Fed speakers talking about substantial further progress, as their catchphrase, not being met in the labor market, as well as the inflation metrics that they look at. And that saw the dollar getting sold off, and the prospect of tightening coming down the pipeline soon was pushed further and further back, and that's a dollar negative scenario. And we saw the rand going from 14.61 at the open of August down to 14.22. And we were rubbing our hands looking at 14 as the next real hurdle to get to. But we then made an about turn, as I mentioned, and effectively this was all about the Jackson Hole Fed Central Bankers Symposium. Every August, the Fed organizes an event for all central bankers, or most central bankers around the world, to come to a little remote village in Middle America, Jackson Hole, Wyoming, I think it's at. And this is where the Fed typically releases, a significant or headline-worthy announcement to the market. And speculation started to build up that they were going to use this as the platform to announce policy tightening. More than that, and that was on the 26th to the 28th of August. So, it was a build-up to that. But on the 18th of August, we got the latest Fed meeting minutes. The meeting held in the end of July. The minutes are released in mid-August. And those minutes surprised the market, where they said that most Fed members supported policy tightening in 2021. Not immediately, but in 2021. And that gives the market a finite date to start latching onto. And of course, that spurred dollar strength and hurt the rand. And we then had a couple of Fed speakers going as far as to say that we need to aggressively taper bond purchases and finish it by Q1 or Q2 2022. And all of this really just counted in the dollar's favor and sent us spiraling to 15.39. Again, just when it looked like all was lost for the rand and looked like 15.50 was our next point that we were going to hit, suddenly Jackson Hole, as a physical get-together, was cancelled because of COVID concerns, and it was taken to an online virtual symposium held on Zoom, like you and I are chatting today. America has been very vocal in its, we're beating the virus, we're rolling out vaccinations, we're opening our markets, we are removing the mandate to wear masks, and obviously this backward step in that narrative, and I think it was a good one. I mean, you don't want to play around with COVID, of course, and cancelling the physical meeting showed that they're actually at a sort of Fed level concerned about COVID. And at that point, the market quickly realized that they're going to not then announce any major announcements on a virtual platform. They prefer to do it face-to-face in a press conference. And the bet suddenly unwound. We're not going to be seeing any tightening announcements on Jerome Powell's speech on the 27th of August, and that's exactly what happened. In fact, he went so far as to say that he surprised the market, saying that when they do start tightening, which more than likely will be 2021 at some point, but right at the end of 2021 now, I suppose, when that process finishes and the market assumed that the end of asset purchase program was called tapering, but the end of their tapering program automatically signals the start of interest rate hikes. He severed the link there. He said, just because we finish or stop purchasing assets, that doesn't mean that we're automatically going to hike interest rates next. We're going to have a gap in between. And that gap could be any length of time. The market's now trying to guess. And a gap means that interest rate hikes in the States are further away than we expected. And the dollar fell and took us all the way back to 14.51. What a pleasure.
But I mean, now this is like a yo-yo. I mean, there's been such a disconnect between the speculation on what the Fed is going to do with their monetary policy and what the Fed chair, Jerome Powell, actually says at all these conferences. So, I mean, Powell's been the rand's friend for some time now. Are we living on borrowed time with the rand? And are we going to be facing the music at some point?
Yeah, it's an interesting one. And I was watching CNBC during the week. They were interviewing one or two analysts. And, the thinking is really starting to agree that the Fed needs to get a 10 out of 10 in terms of how it's managing this transition from ultra loose monetary policy stimulus to kickstart the US market back to a more normal state where, and remember, they've got to hike interest rates at some point. Interest rates are the buffer for any future crisis. And so we are going to get higher interest rates because at 0.1% or 0.15% at the moment, they've got zero wiggle room if another crisis comes down the pipeline, and who knows what's coming in 5, 10, 15 years time. So they are going to lift. They're going to get to 3 or 4%, or I don't know where they're going to end, but somewhere around there, and give themselves a buffer such that when the next crisis hits, they can cut interest rates and support the economy. But in order to get there, they don't want to spook the market. We had what's called the taper tantrum in 2013. The last financial crisis that we had was 2008, 2009, the subprime mortgage collapse in the States, and that was a true financial crisis. There was rot in the system. At that point, the Fed had adopted the same policies. They cut interest rates to close to zero and had a massive quantitative easing program of buying assets. In 2013, they felt that the market had recovered sufficiently enough to now start dialing back their stimulus. But they went in with a bit of a hard touch. They announced it in, I think it was August or September 2013, that the very next month they're going to be tapering. There was no communication to the market that this was coming down the pipeline. And we had what's called the taper tantrum, in that equity markets sold off and there was a huge amount of volatility, and the Fed realized that they'd spooked the market, pulled back, and actually only started tapering sometime after that. And that's the only template that we can look back at in time to say, well, what are they going to do this time around? And fortunately, it looks like the Fed have learned their lesson. So some Fed members are saying we're going to tighten. Others are saying we're not going to tighten. They're drawing out the process over an extended period of time. And most importantly, Jerome Powell, who's the head of the Fed, is cautious in his narrative to the market. Yeah. And so they've been preparing us for months and months. And when it actually does happen, it's not going to be a surprise. In fact, the market has been able to position itself accordingly. We expect, we know what's happening. And, the dollar is going to strengthen when we get these announcements, but it's not going to strengthen from, in Rand terms, from 14.50 where we are today to 15.50 or 16, which might have been the case if they just dropped it on us like a bombshell. We might lose 10 or 15 cents and then pull back, lose a little bit more and then pull back. So yeah, there's going to be volatility. We are going to feel pain, but I do think that we're not living on borrowed time as much as some people might think. I don't know if we're going to get back into the 13s anytime soon, but I also don't think we're going to blow past 15.50 and into the 16s as some people might.
So we've spoken about the international side and the international effect of the Rand, which is one of the most significant players. I just want to ask you a quick question about local. So is there anything local that can affect our Rand that's coming up soon?
Yeah, so we actually had a very positive development in August, which helped the Rand. And that was an unexpected move by Stats SA, who manage all sorts of measurements for our economy, unemployment, GDP, and various other bits and pieces. And they announced that they've rejigged their calculation to look at the size of South Africa's economy. And their recalculation added 550 billion Rand to our market value. It was an 11% increase overnight in terms of the size of South Africa's economy, which is very welcome. That means that, our debt stays the same, right? And our debt is high. But if our debt is measured against GDP and we have a debt to GDP ratio of X%, suddenly the GDP is 11% bigger, our debt to GDP ratio is now smaller. And that is very favorable in the eyes of the credit rating agencies, especially considering that we've got the October mini budget speech coming up in a couple of months' time. We've got a new finance minister who's got to navigate tricky waters there in terms of how to position our economic recovery, but he's been given an 11% boost. And not only that, we've had a SARS overcollection, a significant SARS overcollection of hundreds of billions of rands, thanks to the boom in the commodity sector around the world and all the exports that we've been shooting out of our ports, earning South Africa more money than we expected. So yeah, that's a positive for SA. Cyril's also rejigged his cabinet, taken a bit more control, mainly on the security sector side of things as a result of, or in response to the July unrest. And that's, I think, a positive. But yeah, let's wait and see what happens. As an emerging market, we've got a difficult road to run. Our vaccination program is behind the developed world, but we're making inroads. But yeah, fingers crossed we've got some green shoots locally that can support the rand. But at the end of the day, whatever happens at the Fed and monetary policy in the States, that's going to determine where the rand goes.
No, that's brilliant. Thank you so much, Hadyn. My son asked me to ask you a question. He's very concerned. He's 11. And I was just sharing some information about China's crackdown on tech. He just wants to know, when is this going to filter through to South Africa? And will he still be able to play his computer games?
Yeah, that's an amazing one, eh? Jeepers, they are, I don't even know where the bottom is with this Chinese tech crackdown. And what you're alluding to is a mandate. I don't know if it's law yet, but it looks like it's going to be law, that Chinese online gaming suppliers will only allowed to let minors, so under 18s, play online video games between 8 o'clock at night and 9 o'clock at night on Friday night, Saturday night, and Sunday night, and public holidays. So if there's no public holidays, it's 3 hours a week, Friday, Saturday, Sunday, 8 to 9 p.m. I've got a teenager. He enjoys his little sessions on his PS4 from time to time, and I can tell you now there would be a very, very depressed little boy if that was the case. But maybe it's not a bad thing, you know. You can't get stuck to these devices and go outside and climb a tree.
I think the gaming companies are going to start bringing out games that use a CD and that they don't necessarily have to be online, so the guys can just play on their own little portable devices. But I think maybe for next week we can catch up on what's happening with China, find out a little bit about that, and maybe also delve a little bit into opportunities in terms of where the tech stocks are positioned now, what their future prospects are going forward. There's been quite a bit of speculation around when the bubble's going to burst, and talking to people, a lot of people are saying it has to burst now. They've been saying that for the last 20 years. There are a lot of other guys that are saying, no, this thing's still got a long way to run. So perhaps we can touch a bit about that on Wednesday next week.
Sure. So I'll leave you with a saying in the financial world that says, the quickest way to go bankrupt is to short a bubble too early.
Yeah.
You want to short a bubble too early, you carry on.
Absolute. Hadyn, thank you so much for today, and I hope you enjoy the rest of the week, and look forward to seeing you next week, Wednesday.
Thanks, Gary. Thanks for the chat. Have a good rest of the week. We'll chat next week.
No, fantastic. Thank you, Hadyn. Cheers.
Bye.